The supply of silver, because it's such a small market, silver is the canary in the coal mine. Basically, I mean, it's been the game all along, is when you see these waterfall events, when they hit the markets with paper contracts to push the price down, they're basically trying to prove to people who are watching the markets, dollar good, gold and silver bad. Just remember, the problem now, or the problem going forward, is the fiscal health of not only central banks, but sovereign treasuries. So we're bringing the word insolvency into it. Gold and silver are the only two monies on the planet that cannot bankrupt. All the other currencies, because they're all debt-based, once the debt collapses, then the currencies collapse. And your result, or what you'll see, is hyperinflation, because the currencies will not buy what they once did.
And Bill, when we look around the world, the central banks of the world, sovereign entities, Russia, China, India, Malaysia, Turkey, add them all up, they're all buying physical gold and physical silver. Correct?
Right, those are non-Western sovereigns and central banks. The G7, they're not buying, they're not buyers of gold. And they're not buyers of gold because they don't want to create a bigger supply and demand problem, which will then be reflected on their currencies. The Eastern nations are buying gold as a way to move themselves away or out of harm's way of the dollar / Western finance. So many moving parts. I mean, obviously you've got, the debt ceiling negotiations, and it's actually stupid debt ceiling negotiations. What is that, like a family on a Sunday night? They sit down and decide whether or not they should raise their credit limit. I mean, it doesn't work
right.
like that in the real world, but
right.
It does work like that with the sovereigns. It's really hard to say, to give you a forecast over the next few weeks. But all I can say is there are so many things that are converging at the same time. You've got the debt limit. You've got banks in trouble left and right. The regional banks, they're losing deposits on a daily basis. If you look at money supply is actually contracting, and that's never happened other than during the Great Depression back in the 1930s. I mean, you can look at the stock market. The averages don't show the story because the breadth of the market, you only got a handful of stocks that are pushing or holding the market up, whereas the soldiers are dying and the generals are still standing tall. It's just a question of when the generals fall over.
So as the generals fall over, what we have found over the past 5,000 years is that physical precious metals, gold and silver, can be found to be one of the best, if not the best, insurance policies on the planet, as you said earlier, Bill, because there's no counterparty risk to them. They have no debt, DEBT, associated with them. So, Bill, as I mentioned in your introduction, you are on the ground on the physical metals market side of the equation. So what are you seeing on supply and demand and premiums?
The supply of gold at this point seems to be relatively okay. Silver is definitely tight. I mean, look at the premiums. Even 100-ounce bars, you're looking at $3, $4 over spot. The supply of silver, because it's such a small market, silver is the canary in the coal mine, and it's ringing a bell saying, the market's tight. And what we're seeing is we're not. Just over the last 3 or 4 weeks, we're not getting more orders, but we're getting bigger orders. People are cleaning their bank accounts out, in other words.
And these are not just little purchases that you're seeing.
No, these are, $500,000, $1 million, $2 million. I mean, these are much bigger orders than what we experienced, say, 3, 4, 5 years ago.
So, Bill, when you look at the supply of, in particular, silver, and you've been doing this for decades, how does this compare to other times when the system was wobbling, for example, quaking, 2008, 2000, 2020?
Yeah, there really is no comparison because this shortage or period of shortage is much, much longer than any other time before. I mean, we saw, for instance, late 2008, you saw silver get smashed from paper silver, smashed from $17 down to $9, and silver was hard to find for about 3, 4, 5 weeks. And you couldn't get any under $15, so the real price never really dropped. But this has lasted for months on end now. So this is a prolonged supply and demand problem.
The IMF, the International Monetary Fund, a tentacle of the globalist cult, criminal banking syndicate, this is what they said. Says the world needs to prepare for the, quote, unthinkable, end quote, after COVID and the war in Ukraine. This was written by Katabala Roberts from the Epoch Times. International Monetary Fund Managing Director Kristalina Georgieva has warned that the world needs to be prepared to better handle shocks and the, quote, unthinkable, end quote, in a post-COVID-19 world and in light of the ongoing Russia-Ukraine war. So they warned us several months ago about the unthinkable. So, Bill, are we embarking right now on the unthinkable with, as you said, the debt ceiling issues coming at hand, the small and medium-sized regional banks and larger banks having significant issues, the downgrading, if you will, of the U.S. credit rating? Bill, is this the unthinkable moment she spoke about?
Well, yeah, it is, but the unthinkable moment has been thought about by many people. I mean, we've been shouted down over the years, but all these things are coming together. And just this weekend, for example, the Chinese are publicly saying that they're trying to distance themselves from the dollar because they don't want dollar risk. And at the same time, you've got the G7 conversely saying that they don't want to rely on China for the supply chain. So you've got both sides saying they kind of don't want to do business together. One because they're worried about the dollar risk, and the other because they're worried about the risk of the supply chains getting shut down. That's so dangerous, it's not even funny.
We're one communique away from a Russia-China joint communique saying that they are backing their currencies with physical assets such as gold, silver, oil, natural gas.
I mean, once they make that announcement, gold and silver will become UNOBTANIUM. In other words, you're not going to be able to get them. And I would imagine that'll be within 24 to 48 hours after that announcement. There will be no gold or no silver to be had for fiat